Let's look at the silver miners, because there's been a huge move. First off, read this disclaimer carefully. Let's quickly get the big picture here of the market. Interesting moves here in the megatrends, and I also have other portfolios indicators here, and silver is certainly part of what I call real money. By the way, this huge move is due to a stock split, but that will be corrected when the market opens. Okay, let's look at SIL. So SIL is the silver miners ETF. So the miners give you way more leveraged exposure to this business, moving a lot. So you can see that, okay, we are currently here in September. Generally speaking, it's not a good month here for silver. October is a bit better, but you see that this is generally speaking a weak period. Look at it against, let's look at it against the S&P 500, just for comparison, like that. Very similar message. Okay. So the ETF in question here is the Global X Silver Miners ETF. SIL is the ticker. Weekly data points, getting the big picture. So here we got, the big bull market that we had back in the day. Then silver went into a massive, gargantuan bear market, plunging down here minus 83%, which is quite a haircut. But then we got a rounding bottom, very beautiful rounding. Well, we have a good-looking rounding bottom. From these lows, we've seen a monstrous to this high, 224% move. Okay, so for all intents and purposes, this is a nice rounding bottom pattern, and we have this very clear rally. So the bulls are definitively in charge. They've made a very impressive move. But if you look at silver historically, you can see that there's been many sharp rallies in the past. It's quite common for the silver miners to have these pullbacks. They do move in cycles. Given the cyclical nature here of silver, which is right here in front of us, it is in the papers, we can see it, it's a fact. This pullback that is beginning here, it seems, we are seeing weakness here in the candlesticks. It makes sense. We are due. I mean, we even had a little bit of a mini pullback here before we rallied more. So I do expect some slight deterioration here, potentially us forming what is called a cup and handle pattern. So it would be like a cup, like this, and then we could get a bit of a handle, and that is also a very nice bullish pattern. It's also a very healthy pattern, because after this very excessive move, when the RSI becomes quite overbought, it would be very healthy to have that pattern. No guarantee. But we could correct, of course, let's remove this, we could correct by going sideways, by pulling back a bit and having a rounding bottom. You could, of course, have a sharper pullback, but I think that is less likely of all the probabilities here. Sure, it is possible that we're just going to soar and smash through these levels soon, but I don't like bubbles. I just don't like bubbles. Because there's a big difference between a new bull market that is sustainable and having like a bubblish phenomena, and there's more than enough bubbles in the market already. So we are a bit overbought. Generally speaking, the silver miners do like to have a bit of a pullback every now and then. The accumulation distribution line is very much corroborating this rally. That's very nice to see. There's a 51% correlation with S&P 500. Looking at the daily data points. So here we have the red 200-day moving average. So this is a key lesson here in this moving average. Resistance, and here it becomes support. And we just smash through. We are quite far away from the 50, especially the 100 and the 200-day moving average. It would be healthy to just pull back maybe to the 50-day moving average. So, I mean, we are in this consolidation pattern at this moment, and this is just healthy, okay? Of course, it's very fun to be part of these very sharp rallies, for sure, but this is actually a good thing. This is very good. You should be happy about some cooling down of silver at this point. Okay, so that's the technicals. Let's look here at Finviz. You can see that options are available. Here you can see the performance, 47% year to date, very good performance, huge move. Volume, you know, the gold miners are definitively seeing a lot more volume than the silver miners, but silver is characteristically much more, it moves way bigger than gold. Here you can see the expense ratio, 0.65%. Not the cheapest, but there is no competition really in this space. Okay, so here you can see the PE. The PE is definitively a bit stretched. The dividend here is 1.11%, which is actually kind of decent. Here are the junior silver miners, by the way. ETF MG Prime Junior Silver ETF. Yeah. The junior silver miners, they move even more than SIL. So that's an alternative if you really want to go like full bore turbo mode. Let's look at the holdings. So you got Pan American Silver, you got Hecla Mining, First Majestic Silver. You could of course invest in some of these underlying as well, because some of them are, you know, much more liquid than SIL. Okay. Just out of interest, let's look at the correlation here with the SLV, which is, you know, the silver ETF. So you got a 93% positive correlation on the daily data points. On the weeklies we have 92%. So that's a decent correlation. Let's get here back with the SPY, like so. Okay, so to sum up here, my take on the silver miners. Okay, let's actually look at silver. We have some time here to look at silver, because silver is, you know, this is the silver ETF. So you can see that silver has actually broken out way above these resistance levels back here that we saw the silver miners were struggling with. Hence, we have that clear confirmation breakout. So this is super strong, but as you can see yourself, I'm pretty sure, this move here, it is kind of excessive. It's very parabolic. There's been parabolic moves here in the past, but generally speaking, you see here, there are these cycle patterns for silver. And there's a very strong correlation with between silver and the silver miners. So this this exhaustion candlesticks we are seeing here, the bulls getting a bit tired. This is good news. Even if we get some further pullback and form, you know, a cup and handle pattern, it would be healthy. Okay. So to sum up then, my take on silver. When it comes to silver miners, long term I am bullish on the silver miners and the precious metals more generally, because every indication is that the central banks around the world are just going to print a lot going forward. It is almost impossible for them to start hiking rates. So the fiat money will lose their value, and that will increase the value of precious metals. So the long-term picture is definitively bullish for precious metals. The best way to invest in precious metals is to own the actual metal, because the metal itself is denominated in metal. It is denominated in silver, as an example, while this is denominated in US dollar. And so if say silver moves huge against say Swedish kroner, then you are not going to get any of that if you invest in the SIL, because it's denominated in the US dollar. So that's something to think about. Okay, whatever you do, of course, don't fight the trend, and may the trend be with you.